Hey, Tom, did you know that you could buy a house with less than 20% down?
I did, Joanne, but I'm not sure if our audience does. So great question and welcome to another edition of Coffee with Tom and Joanne. I'm Tom Matthews.
And I'm Joanne Taranto. Today, we wanted to talk about some of the most popular products that are out there in the mortgage world and what your options are as a home buyer and what you can put down for a down payment.
Right. And how you kind of come to that decision. Because you
Yeah.
may have been renting or living at home with mom and dad and saving, and now you have 20% saved. But the question is, should you put 20% down? You know, kind of the things that buyers think about when trying to decide on down payment is what's that monthly payment going to look like? That's part of what that down payment comes down to. Is it better to put more money down or have primary mortgage insurance? And finally, does the house need any work after I buy it? So, Joanne, why don't you talk about some of the things that you see commonly talking with buyers?
Yeah, so the most commonly understood way of buying homes is that, you need to put a 20% down payment, and then you need to have additional funds to cover your closing costs and prepaids. And so, yeah, 20% down is a great option. That's where you're going to see some of the best interest rates on a conforming loan. Even if you have a jumbo loan, putting the 20% down, very important for the rate and the costs associated with that loan. But you don't have to put 20% down.
Right.
You could put 19% down. You
Right.
could put 18% down.
Right.
You could put 16.5% down. So it really depends on what your financial situation is and what feels comfortable.
What the house needs. Yeah.
Right. So you may be looking at putting 20% down because that's what you have in savings, but then you find a house that you absolutely fall in love with and it needs something immediately. Like,
Right.
So let's say it needs a roof immediately, and you're talking about a project that's $25,000 or
Right.
more. So in that scenario, you may decide to put a little bit less down and keep that 25,000 in your savings account so that you have the cash accessible after closing.
Because when you buy a conventional home with a conventional mortgage, you cannot finance repairs. So that's the big question. People say, can I finance my roof? And the answer is no. So you can only finance the money to acquire the property. So sometimes you may be sitting there talking with your realtor, talking with your mortgage broker and saying, listen, maybe on this $400,000 property, maybe rather than putting 80,000, which is 20%, rather than putting 80,000 down, maybe I should put 10% down. So I'm gonna put $40,000 down. I'm gonna take a second mortgage for the other 10%. That way I don't have primary mortgage insurance. And then I'll have access to $40,000 post-closing to take care of the roof and some other repairs. And then if you're a really fastidious saver, as you were, to be able to get that down payment, maybe over the course of the next 24 months, you make extra payments to that second mortgage. And all of a sudden in 24 months, you now have your new roof and your 20% equity. So, there is more than one way to kind of skin this cat. And it's important to know because, there's a phrase you will hear in life. Those with money make more money, and you can't be afraid to get creative.
Yeah. And I think that having a good buyer's agent to help you understand the shortcomings of the properties that you're looking at will help you manage your cash better moving forward. And you don't necessarily have to decide how much money you're putting down until you get to the part where you're making an offer. Because ultimately, there may be two houses next door to each other that are both the same price, but one is much larger and in poor condition, and one is much smaller and in perfect condition, but they work out to be the same price based on their features. Then you may, on the bigger one, say, I want to put less money down because I'm going to need money to paint the entire house, redo the kitchen, replace the roof, whatever it is. You're going to want to have your cash flow figured out moving forward, because we don't like surprises.
No surprises.
Surprises are bad.
And the thing that Joanne and I always say to our buyers is like, listen, if you don't have a relative who's going to backstop you if you run into an issue, your next alternative is using your credit card. And if you think about it this way, your 30-year mortgage, let's say historically, is 6%. Historically, a credit card rate is like 25%.
Yeah.
So if you're thinking, is it better to pay maybe $125 in mortgage insurance because I want to hold some cash back,
Mhm.
or better, that if I have an issue to put it on a credit card. When you start looking at dollars and cents, it's a slam dunk to hold back a little bit of money
Mhm.
and keep cash reserves for the what ifs. Because
Mhm.
once you own a house, I guarantee you're going to have a what if.
Totally.
Something's going to happen that is completely unexpected. You had a great home inspection,
Mhm.
everything was perfect. In the first month, the hot water tank just dies. Just happenstance. And if
Yeah.
you have cash set aside, that hot water tank is a speed bump.
Mhm.
It's just not a big deal.
Yeah.
But if you,
It's an inconvenience.
it's inconvenience. But if you've loaded in all your cash and you have no liquidity and you have to put that on a credit card, now that becomes a catastrophe. Now it becomes an emergency.
Mhm.
And that's why we're always talking about down payment, emergency funds, cash flow
Mhm.
when working with buyers and acquiring
Yep.
properties.
And there are other options as far as going to 10% down. There are still 10% conventional loans out there without any PMI on it, primary mortgage insurance. And then there are other government-backed loans which offer you to go even lower, like 5% or 3.5% is the minimum on an FHA loan, or 0% on a VA loan.
Thank you to our veterans.
Thank you, veterans. So there's really a lot of options out there for how much to put down. And the true answer is you really won't know that until you get to the home that you like, you see what it needs, and then you decide what makes sense financially.
Right. And there are also opportunities within that mortgage to get adjustable rate mortgages, fixed mortgages. And none of them are bad. You know, people say it's bad to put 3.5% down, or it's bad to do an adjustable rate mortgage. And that's the wrong term. The term is it's right for the right people. It's not about being bad, good or bad. It's about the right fit for the right person. And what's right for you may be wrong for somebody else.
Yep.
And that's why one of the things that Joanne and I love about real estate is that every single transaction has some unique components to it. And we don't treat anyone the same as somebody else. Everyone's circumstances are different. And we want to make sure that we tailor everything we do to your specific needs.
Now, with that said, when you're in a multiple bid scenario and there's more than one buyer making an offer, the higher the down payment, the better you look, right?
Absolutely.
Because if you take off your buyer's hat and you put on your seller's hat, when you're selling your home, you want to see some highly qualified buyers, and the larger the down payment, the better, the less risk there is between the offer and the closing. So something to keep in mind. Not something to change your financial standing on. So if you have the 20% and it feels comfortable, that's a great place to start.
Yeah.
But we work with people all the time. They put 40% down, 50% down, 60% down. Whatever your down payment is, it has to be what's the right profile for you as a buyer. And you'll want to balance that with whether or not you're competing with other people in an offer scenario.
Right. That's great. I mean, this is a great topic, something that everyone should be focusing time on. And we just want to thank you again for coming to another edition of Coffee with Tom and Joanne. I'm Tom Matthews.
And I'm Joanne Taranto. If you like these videos, like and subscribe.